Hello everyone. How's everyone doing? Let's start this. Let me know guys if you can hear me on the chats, please. Let me know. Hello guys. Let me know if you can hear me on the chats, if you can see the screen, please. I would appreciate it if you can, guys, let me know. I will let the chat know as well that we are live now. Give me a second. Awesome. Okay, so guys, please let me know if you can hear me on the chats, please. I appreciate it. So we can start as soon as possible. How's everyone doing? Sorry for the delay, guys. I didn't reach the according hour, but we are live now. Please let me know if you guys can hear me. Awesome. Thank you, Janet. Appreciate it. I appreciate your response. Awesome. Okay, so thank you, John, as well. How are you guys feeling? How is the market going, treating you so far? How's the market treating you so far? Let's go, guys. Let's do this. I think you're going to like this educational series I have prepared for you. How's Bitcoin treating you so far? Are you in profit? Are you in loss so far? Let me know. I would love to know it. Yo, let me know in the chats. We are back. I don't know if we are back in terms of the market, but let's see. I hope we have a pullback soon, anytime soon, to be honest. That's cool. Let's fucking go, guys. All right, so let's start. Let's go ahead and start this. Hello everyone. Nice to see you here, guys. Janet, not bad. Thank you for your help. Thank you, man. Thanks everyone that has joined today. Sorry for the delay. I wasn't able to reach home for the desired hour, so we had to move it. But thank you guys for being here. I really appreciate it. Really appreciate it. Are we expecting a pullback? Yeah, well, actually, I'm positioned for a pullback right now. You can see my screen. Last week, the Soul call, I make 3K. Nice, man. Nice that you guys are making money with gem hunters. That's the overall goal. Keep the good work. Thank you, man. I appreciate it. Let's start. Yeah, definitely. Let's start. All right, so guys. So today's stream, I'm going to show you the tools that I previously told you in the previous live stream. Okay. I don't know if you guys remember about the high relative volume tool. Okay, so let's go to another chart right now so I can properly show you this. All right, we have this, remove drawings, and let's remove everything here as well. Awesome. Okay, so in order to be able to understand the high relative volume tool, let's add it to the chart first. Okay, so the tool that I use is called Volume Suit by Leviathan. Okay, Leviathan makes very good indicators, to be honest. And in the configurations, just set relative volume. All right, you check 1.5, 2.5, and 3.5 as well over here. Okay, and everything else, just click on color candles, and everything else just as it comes. Okay, no needs for that. But other than that, I like my candles to be other colors, so you can configure it as mine if you want to. Otherwise, you can just leave the colors as they are. They're there. All right, and yeah, other than that, I don't need anymore. And you don't really need this histogram, so the goal is to be able to color the candles inside the chart. All right, so in order to be able to fully understand what the highly related volume is, we first need to go back to a previous teaching that I taught you guys already, on the deviation curve. Okay, so let's draw. Oh, sorry guys. Let's draw a deviation chart over here. Standard deviation. All right, we have it over there. Perfect. Okay. As you guys remember from my previous teachings, the zero level. Okay, this is zero, which is the mean basically. All right, and to the right side. Okay, to the right side we have positive values, right? And in the left side we have negative values. Okay, and it can be whatever value you want. Like it can literally be just minus 1, 0.1. All right, but there are certain values that according to the volatility, according to the liquidity of the asset that you are trading, you have to take into consideration better. Like you're not going to use I don't know, like a 13 periods moving average, right? Better to use the 10 or the 20 or the 50 or the 100 or 200, because it's basically the moving average that everyone's using. Okay, and that makes sense for a reason, because the markets move because of what everyone is expecting basically. All right, so what since the middle line, it's the mean, right? We also have the more important values, at least for myself, all right, and for my trading, all right. It's minus 1.5, okay. We also have minus 2.5, and we also have minus 3.5. Okay, these are the most important for my specific strategy, right? When you try this indicator, you will need to play with this. Okay, play just like you would play with any other tool inside trading, because nothing is perfect. And on the right side, it's the same. It's just the positive values. Okay, so we have this one, 2.5, and we have this one over here, which is 3.5 positive. Okay, so what does this help? This is normally the set score, in which a candle itself, or for example the volume profile, is measured in the standard deviations according to a previous period. Okay, what does that mean? That, let's say, I'm going to draw this in a candle. So let's say this candle over here, right, was a normal candle, right? And let's draw this like volume, all right, for this candle. So this candle is bullish. Let's put it as green over here. This is the volume. Okay, this is the volume, and this is the candle itself, right? So let's say I'm measuring the relative volume of this candle, okay, compared to this one, the next one, which is possibly a bit longer. Okay, it's still bullish. All right, it's still bullish, but the volume, okay, is at least 1.5 standard deviations above of the previous period I'm considering. All right, and remember guys about the indicator that I just configured. 1.5 should be colored above, okay, above or below, but this is above, should be colored this way. Okay, so this candle over here should be this color. All right, because the volume is currently being 1.5 STD above of the previous one, if we compare this to the previous candle only, right? But for the overall calculation of this indicator is using 50 periods, okay? Because of the set score is using 50 periods, okay? And a simple moving average length of 300 candles, all right? So that means that for every candle, the relative volume is calculated using the 300 previous candles to understand if that candle has 1.5 standard deviation above or below, or 2.5 standard deviation above or below, or 3.5 standard deviation above or below. Same. So what is the purpose of this? So you may ask yourself, like, okay, yeah, I would like to know, like, if a candle has more volume than the previous one or whatever, but what is the purpose of using a high relative volume tool, right? And to be honest, this is a very, 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 very useful tool. Why? Because the main characteristics of a high relative volume candle is either it's showing you, okay, a real breakout, it's happening, right? Because I'm pretty sure you guys have heard that when you have breakout, it has to be backed by volume, and it's true, right? Because normally breakouts that are not backed by volume, they end up being fake outs, okay? But this doesn't mean that this tool is going to precisely show you when it's not a fake out or when it's not a breakout. And that's why we have candle pattern sticks, okay? We have candlestick patterns that need to be confluent with the movement, all right? The other thing that this high relative volume is showing us is that possibly we are near to the end of the move, okay? We are very near to the end of the move. So it's either a real breakout or near to the end of the move. And the third thing that this high relative volume is telling us, okay, that a lot of stops or liquidity is taking place at certain chart location. All right, so this is extremely important when we are going to see the tool, okay? But all of this high relative volume needs to be backed, okay, by okay, it's not letting me, let's go up. These high relative volume candles need to be backed by candle formations themselves, okay? And why candle formations are important? There are hundreds of candlestick patterns, and it would literally take you years to memorize them all, okay? So this makes no sense at all. Just a few of them, okay, just a few of them have good win rate. And if you don't believe me, you just go ahead and Google and type, like, what's the win rate of a bullish engulfing candle, and you're going to have it, because there are people that have already back tested each candle formation, and they have the win rate for each one, okay? Because if you go to the charts and you go long or short, every time you see a bearish or engulfing candle in certain asset, and you measure that from the past 10 years, you are going to have an overall win rate, right? But as I said, there are hundreds of candlesticks out there. But in my opinion, okay, people often get confused with this, as they see any candle and they react as this, like if they always mean something, and that's not true, okay? So the first thing you need to understand, all right, candle patterns only mean something when they play out in a certain location of the chart, okay? First criteria to understand, all right? This is extremely important because while using the candlestick pattern to trade, you can only take into consideration the candle itself. You also have to look at the trend and basic principles of price action that we have already seen, right? So you have to understand the whole picture, and if the candle is aligned with it. Okay, and the third, the win rate of each candlestick formation will decrease a lot if you don't trade them according to the whole analysis of the current market situation, right? If you trade all of the bullish and engulfing candles that you see out there, it's not going to be the same in that if you only trade the bullish and engulfing candles that are interacting with a 100 moving average. You see, it's a filter, but this filter will increase the overall win rate. It may be overcomplicating it, yeah, but really you are just using two type of information to make a decision. And we always say, like, the best traders that I have known are the ones that don't overcomplicate their systems, because I literally have seen persons that can literally teach me their trading strategy in 3 simple steps, and they are making a lot of money. Okay, so don't look for this holy grail that it's teaching you like 100 tools that you need to put on your chart just to be able to understand what is happening, and then when these and these and these and these and these happens, then you take a trade. That's not necessarily true. All right, so the third thing that it's extremely important, and I think the most important one, okay, you don't recognize a candle, okay, formation unless the candle has closed already. Okay, I'm pretty sure that you guys have seen some candle, I don't know, like in the daily chart, and it's like 30 minutes for the candle closure, and this candle is showing, for example, a bearish engulfing candle, and then in 30 minutes the candle structure changes completely because of a news, because just volatility rises, whatever. So never recognize a candle unless the candle has closed already. And believe me, this is going to save you a lot of money. When I started using these tools, there was a lot of times where I guessed, oh, this candle looks nice because it's very likely to close this way. I entered the trade there, and then like 5 minutes later, the candles had like shifted completely. Okay, so please never take into consideration a candle that has not already closed. Okay, and you may ask yourself, like, okay, what are the candles that we're going to see today? All right, so the first one is the engulfing. Okay, I'm only going to show you the ones that I use. That doesn't mean that there are other ones that might have also win rate and whatever, but these ones are the ones that I constantly check and they work for me. Okay, and if I'm making money in the market, right, like I'm going to show you today, a trade that I shared with the paid group on Tuesday, teaching possibly like the same thing but a little bit more dense, and it was basically on a bearish engulfing candle. All right, so that's all. Sorry guys, drinking some water. Okay, so now let's see the engulfing candle. So the engulfing candle normally, all right, it's going to be a candle that it's engulfing the previous candle with its high and its low. You can see this candle itself is engulfing and closing, all right, above the previous candle high as well. Okay, so what are the characteristics of this candle formation? All right, the first one is the shift in momentum, and the most important one actually. If you see a bullish engulfing candle, that means that the momentum is shifting bullish, because basically what it's telling you is that the bulls have taken control. If you see bearish engulfing candle, it means that the bears have taken control. So you are shifting the momentum. All right, this means the shift in momentum, and they often happen. All right, they often happen at tops and bottoms, or tops and bottoms, or they also happen at trend continuations after pullbacks. Okay, now you see this candle over here. Let's put this in another color for you guys. All right, this is a bullish engulfing. All right, now guys, if you have any questions during the stream, please let me know. Okay, all right, guys, can you please let me know if everything's fine with the screen sharing and my voice, if you can hear me well. Awesome, thank you. Okay, so the next candle that we're going to see is the pin bar. Okay, let's go ahead and try to draw a pin bar, right? Normally the characteristic of a pin bar is going to be that it has a very long wick. All right, so let's say this one's bullish, okay, and a very small body, and this one is bearish. Okay, what does this pin bar means? Okay, this pin bar means basically change of momentum as well. Okay, second, it's liquidity absorbed, and I'm going to explain why. All right, and yeah, that's basically it. Okay, that's why we normally have these kind of wicks that are very long. All right, because that means that if I draw this on X and Y chart, that means that price basically when forming this building this pin bar, it has the open, right? It has the open. Market start going bullish, and then the market quickly reversed, making the low and then the close. As you can see, this formation over here can stand for a B shape, right? And B shapes are extremely powerful pattern formations that either on the bullish or bearish side, right? So why does this mean like liquidity being absorbed, right? Because possibly there was a lot of, let's say, liquidity built below this, and then the market just go ahead and make this liquidity absorption of all of these previous stops, and then the market continues to the other side. All right, so this is a very extremely powerful candle, okay, and we are going to see how to analyze it. All right, then the next one, and I actually only use 3, and these are my favorite ones, and each one have like different criteria for trading. All right, the next one is the inside bar pattern. Okay, and inside bar patterns are literally the same as engulfing, but on reverse, literally. So we have this candle, all right, that we're going to put it as, okay, this color, and then we have the inside bar. So as you can see, this inside bar is currently inside the previous candle high and the previous candle low. Okay, so what does this mean? That it's basically showing you, all right, it's basically showing you a range high and a range low from which you can trade from in any temporality. Okay, so inside bars are very powerful, even though what they mean is basically indecision. Okay, indecision in the market. and range formation, and basically a slowdown of a trend. Okay, these are the three candles that we are going to look for in the charts. But what are the confluences for these candles? Because as you might know, trading from candles themselves is not as profitable as if we go ahead and mix candle formations, okay, plus relative volume plus footprint charts. This combination over here, okay, this combination over here is extremely profitable. All right, guys, believe me, okay? Believe me when I say this, this is literally going to change how you see candle formations. And you're going to analyze the charts candle by candle, how it should be done, all right? Well, okay, you can analyze the macro, but you always need to go to the micro to take trades. That's how it works, okay? Even if you are swing trading, if you're analyzing the yearly and monthly chart or quarterly chart, you're not going to be able to take trades necessarily on those time frames. So you need to go back to the daily or something like that. Okay. Let me see if there are some questions. Yeah, basically pin bars can also highlight like tops and bottoms. That's extremely important to highlight over there as well. Do you have any social media accounts so we can follow you? Sure, guys. Like I have always shared, you can follow me on X as Bast Decode. Okay, you can find me on X as Bast Decode, and amazing, guys. Awesome. So what we're going to see is how to be able to use the candle formations past relative volume past footprint charts. Okay. So now you may be able to possibly do a screenshot of this. Okay. What recommended time frame do you use when trying to analyze candlesticks? Okay. That's something that we need to add here. Thanks for reminding me. Okay. The monthly, weekly, daily, and 4-hour are the most important ones. Okay. If you go down to the 1-minute chart and expect to have only trades from, let's say, pin bars or engulfings, you're going to find a lot of them. Okay. But when they come from these higher time frames, they actually mean something. Okay. That's extremely important. So the pin bars indicate a momentum shift. Would it be advised then to enter a reversal trade? Yeah, it can be done. Yeah, and that's what I'm going to show you guys. Okay, but because you might have pin bars also in trend following environments, and they are extremely profitable as well. So all of these candles can happen in trend following environments or mean reversion environments. Okay, that's the goal, to be able to read and shift your bias according to the candle formations and the overall macro environment. All right, so let's go to the charts. All right, in order to have this combination of candle formations, relative volume, and footprints, you have to you have your normal price action chart, right? You have to add this tool over here, and the next tool to add is the PVP, and I already showed you guys this. Okay, the period on one bar, row size 14, uncheck extend POC, uncheck volume profile, uncheck value area high, value area low, make this more visible, and that's it basically. Okay, so now you can see that every candle is showing me the point of control of every candle. This is a simple version of footprint charts, okay, because footprint charts have a lot more information, but unfortunately TradingView doesn't have access to that kind of data. You will need Excel charts for that, or possibly other software. But since I know we are all beginners here, or possibly it's not that necessarily for you to buy Excel charts because it's kind of expensive if you are not like a professional trader that is making already profits from the market, I would say just try with these and it's going to work for you, believe me. Okay, You have to add this, and let's go back to my charts. All right, let's go back to my charts. I normally trade on Bybit. All right, let's go to the daily chart. Let's go to the daily chart on the current price action. All right, now we have a clear and pretty awesome example over here. All right, this, let's see if you guys have been paying attention. How is this candle called? This one over here. Let me know your thoughts. How is this candle over here called? Nope, it's not a pin bar. You see the body is very strong, and the body is currently on the middle of the overall candle, so it's not highlighting any direction, to be honest. Nope, it's not a doji. No, guys, it's not a pin bar. You see, this candle, what is it doing? This candle is engulfing these candles and these candles. Bearish engulfing. Okay, this is a bearish engulfing. This is a bearish engulfing candle on the daily chart. Remember the structure of a candle, right? So as you can see, this is not only, yes, actually this is a bearish engulfing, not a bullish. You see, it's dark on my chart, so it's bearish, right? Not only this candle, right? Now let's see for confluence, right? Bearish engulfing plus high relative volume candle, right? This is a high relative volume candle. It's colored in the color I told the indicator to color, which is above 1.5 of the standard deviations. Okay, and not only that, but the footprint, the PVP, the point of control, is showing absorption on the week. Why is that? You can clearly see, if I zoom in more, we can clearly see that the point of control is currently at the week. Meaning that a lot of traders were trying to long the continuation of this up movement, but they were trapped. They were trapped over here. Okay, so this is a very confluent candle to understand the momentum shift. Why is that? Because the daily chart is currently on a bullish structure, right? Daily higher high, daily higher low, daily higher high, daily higher low. So basically the daily chart is doing this, right? But in this top over here, it's making a failed auction. And this failed action is confluent, okay? This failed action is confluent with a bearish engulfing candle that has high relative volume and it's showing absorption. All right, so even though the macro trend is bullish, the current momentum, okay, the current momentum has either shifted bearish and we are likely to see a pullback towards this level or this level, right? Or we're going to see a consolidation below resistance until we continue higher. Okay, so you can trade, you can easily trade either this range, right? Or look for short opportunities to change your bias a bit. That doesn't mean that the overall picture is not bullish. We can clearly see that we are on a bullish market structure, guys. Okay, but bullish market structures also have pullbacks, and those are pullbacks that gives us the opportunity to continue the trend and have a better risk to reward. All right, so that's why these candles are important, and I call them candle biases. All right, because even though the macro trend is bullish, that doesn't mean that the bullish trend cannot have pullbacks, and these pullbacks are the ones that are going to give me the opportunity to hedge my long positions and to look for better risk to reward long positions. because it's not the same going long here, expecting that the market is going to continue and go higher, right? That going long here or going long here. It's not the same, because these going long here, possibly your stop loss is below this level, right? You see, you're not going to have the risk to reward. If you go long here, now your risk to reward has shifted in the middle. Now, if you go long here, your risk to reward is going to be way better. So that's why it's important, okay? Now that we have the confluence, all right, now that we have the confluence that we had a failed action on the daily chart, and also if we go to the weekly chart, guys, we're going to see that we are currently on a weekly resistance level, which is also confluent with the overall rejection that we are seeing on the daily chart. All right. So if we go back to the daily, this is our first confluence, right? We are on a daily resistance. We are also on a weekly resistance, and now we go lower, right? We were lower into the 4-hour chart, because the 4-hour chart, what we wanted to see on the 4-hour chart is that this overall trend, right, is being confluent with what's happening. And let's just make this is an intra-week higher low. All right, it's being confluent. You can see here, you literally can see here that on the 4-hour chart we are printing. Now, guys, what is it called? This candle over here, how is it called? How is this candle called? Bearish pin bar, exactly. Good job, guys. Bearish pin bar at resistance, right? Overall failed action. You see, one candle trying to break up, one candle turning back down, one candle up, down, up, down, up, down, up, down. You see, a lot of fake breakouts happening. All right. So the market, it has two options right now, because it has already consumed a lot of liquidity on this resistance level. The next time it's going to try to break out is going to be easier, actually, because a lot of liquidity has already been consumed. But when you see this, you start seeing a momentum shift, and this is basically what this candle is representing here. Bearish pin bar on the 4-hour chart, that it's high relative volume. You see, high relative volume. And the point of control is pretty near to the week, since I told you guys that this PVP is not going to be as accurate as seeing the footprint charts on Exo charts. The footprint chart on Exo chart is showing the point of control around here. So it's clearly absorption. It's clearly showing absorption. All right. So after this, right? After seeing this confirmation on the 4-hour chart, all right, normally what I would do, is go even lower. Let's go to the 30-minute chart. And if I see the 30-minute chart, what happened over here, guys? Pretty easy, okay? Left shoulder, you see? Failed action, shifting market structure, right? And you have what pattern? Over and under, Quasimodo pattern that I showed you guys. And for this, I normally set two different criteria for entries, right? Which is the candle, and I don't use high relative volume here. Okay, which is the candle that with the bullish candle before the bearish breakout, right? We have this candle over here. This candle over here represents a lot, because it's telling you where the market might bounce. Oh, I hate this. Okay, this is representing where the market might bounce if we go back to this level. Okay, and the next level to that it's confluent is the over and under swing, which is this one over here. Okay, so now I'm going to what I'm going to do is that I'm going to share this on the minute chart, which is already is, and this one on the minute chart. All right, awesome. Okay, why? You see, I'm currently on a swing short, and I'm currently also on an intraday short. I have taken several shorts already on this, but you see, if I go down into the 5-minute chart, we're going to have a lot of trades over here. Okay, so this is the confluences that we have from the 30-minute chart. This is the zone that I want to enter trades from, right? This is the zone, the overall zone that from where we want to enter trades. So the first time in the New York trading session, okay, where the market approached this level, it made a failed action over here. You see, failed action, right? Then it made a market structure shift, and then I enter it over here with my stop loss above this level. For this one, I got stopped out. Okay, that's nice. This was my entry. Yeah, this was a short. This was my entry. My take profit was around here, and this was my stop loss, right? I got stopped. Nice. Now, I don't go short again because I know that the market might continue higher towards my next desired level, which is the over and under swing. Now here we have the same over and under, left shoulder, failed action, market structure shift, which is the last candle that made the market structure shift, this one over here, right? So I set my entry. My stop loss is going to be above the previous failed action, which is around here, right? And my take profit can be here. Okay, that's 1, 2, 3, 4 take profits possibly if you want, or if you want to trail stop losses, then you have that. So you see this trade is profitable already. Okay, now we have another trade over here. You see another trade over here. You see 3 drive, failed action, shifting market structure, continuation, zone to enter over here. All right, continuation. My stop loss is above this level, and I'm targeting lower levels as well. Okay, so I have 2 profitable trades for now, and I haven't been stopped out. And the next trade is the current one. Okay, another interaction with the zone of entry. I'm leveling up here, which is happening around the over and under swing. All right, same criteria: left shoulder, over and under swing, failed action, breaking market structure, which is the last candle that make this market structure. This over one around here. I wasn't able to enter this on limit order. That's why my entry is up below here, because I entered late. My stop loss is above the previous entry as well, and I'm currently in this trade. Okay, I have already taken profits from this trade that have taken all of the losses that I took on this one that got stopped quickly, and I'm currently holding. Okay, I'm currently holding. Oh, this doesn't look nice. I'm currently holding the short swing trade. Just let me erase all of this. All right, let's go back to the 30-minute chart. Okay, because my over and under swing trade started here. This is my entry. This is my stop loss for the swing trade. All right, and I'm targeting the next volume level around 97K. Okay, I'm still holding, and I don't think I'm going to move my stop loss, because if I got invalidated, it's going to be nice, because it's going to tell me that I can still, that the market, even though it's showing bearish signals, they are just consolidation. So I need to take care of that. All right, I'm currently in 2 shorts. This is an intraday with a higher risk to reward, and this is a swing trade with a lower risk to reward, and I'm still holding them both. All right, and where does these ideas came from? Just from following the high relative volume, the candle formations, the resistance and support levels using volume levels, and the footprint charts, which is the point of control of the volume profile. That's all, and the pattern formation. So you see, we are mixing everything. We're mixing everything. We have over and under pattern, we have bearish engulfing candles, we have pin bar candles, we have high relative volume candles, we have point of control showing absorption, and we have the pattern themselves to make us be able to set the limit orders and set our stop losses for the trade management. Okay, so these are the current trades that I'm currently in, right? And these all came basically from understanding the overall picture. So if I go to the daily chart over here, if I go to the 4-hour chart over here, you see bearish engulfing. The 4-hour is showing the pin bar, right? Showing the pin bar, and then I go to lower time frames to understand. Obviously, I take these trades from an order flow perspective as well in extra charts, but that's going to be for future lessons. All right. So this would be the end of today's lessons, guys. Let me know your thoughts. Let me know if you have any questions. I'm here to answer. Please. I know that you guys have questions right now. I know that. So let me know them. Take advantage of that. I'm here, and tell me your questions. If not, then if you have any doubt after this, you just tag me on the Telegram and I will answer. All right. Okay, guys, I have some questions here. Thanks for answering. Adam, hello. How do I know which pair crypto to analyze as a day trader? Okay, I'm going to show you that, guys, in future lessons, because I do that filter in the open interest, and there's tools for that. But look in Twitter. Okay, this is really simple and it might be obvious, but look at crypto Twitter and don't go ahead and trade whatever any trader says, right? But let's say, for example, fart coin. It was trending previously, right? You're going to see a lot of people talking about fart coin. You go ahead on the charts, analyze fart coin, and see if you have an entry. It's easy as that, literally, right? But in my opinion, you can do this on open interest as well. So you have open interest filters or volume filters that are going to tell you which candles, which coins are having more volume or open interest currently, so you can trade them quickly. If I was a beginner, what would you recommend learning? I understand this a little bit, but I want to dive a bit deeper to understand this, or what would you recommend where I start? Okay, Andrew, I would say start by looking at all of the free videos that gem hunters have right now on the YouTube. All right. This is not only going to give you a base, but it's also going to give you a place to start, because we're sharing different concepts with the different analysts inside gem hunters. So possibly you're going to say, oh, I like what Bast is using, right? So I'm going to dive deeper on the tools that Bast showed me on the videos, and I start investigating about them. Okay, or possibly you're going to say like, oh, I like the crypto data approach to the market, right? I find Bast approach to the market a bit more complicated. That's fine. That's completely that's natural, right? So you go ahead and investigate what crypto tools, crypto data tools is using, and you start diving into it. That's the way it's done. Right? Because all of the information that I'm sharing with you guys is available online. It's not like I paid for this or I found this on a magical website that you don't have right now access. It's not like that. The only difference is that I found the methodology. I started creating my methodology around these tools. I started back testing them, and if I didn't understood something, then I go back into not only the charts, but I try to understand everything behind what I'm using. Okay. It's going long for some alts. Should I close the trade? What trade do you mean? I don't know. I don't know what you mean. Can you elaborate better on that question, please? Okay, the last question, please. Is it true that as a trader you must know to analyze BTC for you to be successful when analyzing other pairs? Yeah, definitely. Yes. Like if you are a crypto trader, all right, the first pair that you need to be able to understand is Bitcoin. I don't even recommend you that if you are trading crypto assets, you just start trading Bitcoin. Once you understand Bitcoin, you will be able to understand the movements in all other altcoins. All right. So if Bitcoin is bullish, you don't go and short altcoins, right? If Bitcoin is in a bull market and you see Bitcoin is ranging, you don't go and short altcoins, because possibly when Bitcoin is ranging, that means that Bitcoin dominance is going down and people are shifting to altcoins. So that means that altcoins are very likely to go higher. And if Bitcoin is bearish, you don't go on long. You don't go on long altcoins. That's what often beginners do. Like Bitcoin has reached the top of a trend, right? Or Bitcoin is bearish, and they are still buying altcoins like there's no tomorrow, because the altcoins trends haven't shifted yet. All right. So definitely, it's like if you're trading forex, you are going to find a lot of confluence, but by analyzing the dollar index. You analyze the dollar index, and it's going to be easier for you to trade euro dollar, to trade USD, AUD, GBP, USD, etc., etc., etc. Drew, thank you, man, for being here. How do you determine what time controls to use the different trades? Okay, that's a good question. That's definitely something we can include here. So, in my opinion, for swing trading, and you don't often see this, like you need to use no more than 4 time frames for this. For swing trading, I use the weekly chart as my primary trend. Okay, then the daily chart for secondary trend, then the 4-hour chart for confluence, all right, and then the 30-minute chart for pattern formations and entries and trade management. Okay, and this same can be applied to for intraday. For example, you can use the daily chart for trend, right, the 4-hour chart for confirmation, the 30-minute chart for pattern looks, and then let's say the 5 or 10-minute chart for trade management. All right, and for scalping, you can use the 4-hour or 1-hour chart for the overall trend, right? The 30-minute for confirmation. Then you can use the let's say the 5 or 10-minute chart for the patterns, and then you can use the 1-minute chart or tick chart for the trade management. Okay. So placing a short trade on BTC targeting around 101K or 99K is reasonable. Well, I'm short in Bitcoin. I'm just following my strategy, guys. It's not like I'm just making things up, right? It's not like this trade is going to go straight towards this. As this is a long trade. I need Bitcoin to. This is not like a scalp trade. You see, I need Bitcoin to go. I need Bitcoin to decline like 5% for this trade to take profit. Okay. Yes, it's reasonable because we have the confluences that are telling us that this might happen, but this doesn't mean that the momentum can easily change and Bitcoin to continue go higher, right? And in that case, I just shift my momentum as well and I go long. This is reasonable to me and my strategy, right? If it's not reasonable for you and you are a long trader only, then wait for Bitcoin to possibly reach a support level that it's important, and then you go long, right? That it depends on your trading style. I'm just following my strategy. I need to take every single trade that my strategy tells me to. If I don't, my overall win rate, my overall strategy is going to suffer. All right. How to choose leverage for scalp, day, or swing? Okay, swing leverage is just a risk management tool, guys. Literally, leverage is just a risk management tool. If you're using leverage to try to make more money, you are going to get wrecked. That's not how it is supposed to use. Okay, why is it a risk management tool, right? It is because, let's say you have a $1,000 account. Okay, if you want to go on a full Bitcoin trade, you need leverage, right? You need leverage to go on a full Bitcoin trade. But that doesn't mean that your overall risk on that trade needs to go higher than, let's say, 5% per trade. That doesn't mean that, because you can use literally 200x on a Bitcoin trade or whatever on any platform, right? And it still risk 1% of your account. The only difference is that by putting your leverage on 200x, your liquidation level is going to be very close to your stop, if it's not like even below your below or above your stop level, because you will need more money from the exchange to actually open that position, and that you are not using much of your capital to enter that trade, and that gives you flexibility to look for more positions. That's the only difference, right? Because if let's say you use like 5x leverage, right? From a $1,000 account, it says that you can trade up to $5,000, right? You have 5x what you have on your account, but you can still risk 1%. And that's how you should be doing it, okay? And if you are using just 5x, that means that you cannot open a higher position, like a 1 BTC, because you need $100,000 to open a full BTC position. Okay, so it's just a risk management tool. You need to base your trades on a risk parameter, on a risk percentage parameter. So even if you're using 50x, 10x, 15x, 100x, or whatever x on leverage, you still can be risking just 1% of your account, or 2% or 3%. I don't go above 5% on each trade. Okay. Awesome, guys. Let me know if you guys have any other questions. Hey Andrew, how long have you been trading? Do you ever do forex? Yeah, I started trading CME futures, okay, like 7 years ago. I was profitable then. Then I shifted to forex. I started trading gold and some USD pairs. To be honest, I wasn't profitable on forex. I was profitable only trading gold and US oil, like commodities trading. It was nice, really nice. I still trade sometimes gold. I really like the price action on gold. And then I completely shift my focus to crypto. So I have been trading around like 7-8 years. Thanks, man. Very good lesson. Thank you guys for being here. Thank you very much for your words and your attention. It means a lot to me. It means a lot that you are here. So that would be all for today, guys. Hopefully this is useful. All of the tools that I have shared with you are useful. Okay. Andrew, thank you, man. Thank you for being active. I love the energy, guys. So see you guys next week. If you guys have any questions about what I have shared here, please go and practice it. Please go and incorporate it to your trading strategies. It's only going to give you more confluence. And if you have any questions about it, just tag me on the chat. That BuzzD code on Telegram as well, and let me know if you have any questions. I'm here for you guys. I'm here. So if you guys have no questions, that means that I explained it perfectly, basically, and I don't think that is the case. So you go ahead and practice this, and I'm going to be there for you guys. Okay, appreciate it, everyone. Take care. See you next week. Bye bye.